Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Lynn & Associates with your agriculture update for this Thursday, the 20th of April, 2017, just after 2 p.m. Central Daylight Time. Well, if we look at the grains, you can see that there's a sea of red, and of course the wheat leading the way to the downside. A lot of talk here that the wheat market and the Board of Trade is going to go to the $4 level, which is the loan level for the farmers, and it's going to sit there for quite a while. Could be years that it hangs around that number, is the talk. That doesn't mean it will happen. I hear talk that the Nove beans are going to $8.50, so the bears are out in play. I hear that meal's going down into the 280s. We'll see if that comes about. One thing I can tell you is the powerhouse is the July cotton to the upside. If you look at the May cotton, I think it went up a limit today. Sugar market weak. You're going to see the coffee market came falling apart today. Now, when we take a look at the dollar, well, it's up one. That's not 17 points. It's 1.7 cents out of this. It's basically unchanged. We have a small rally in the euro and the pound. The Japanese yen down, which is, all this impacts on the grain markets for export business. But the simple fact is our grains are not export competitive, and that's why it seems to be a race to the downside. Now, as we come on this chart and we take a look at the May soybeans on a weekly basis, you can see you've gone from 1080 to 929 3/4 last week. You're still above last week's lows by 17 cents, and you're down for the week so far 8 3/4 cents. So you can see what it's doing. You can see the gradual erosion, but we're still not back into that 948 level where we were earlier. So we'll have to see if the market gets there. And with today's close at 56 3/4, it did not take out this low day right there at 56 1/4. As we look at the chart action right now, I think I've made mention of this, but I'm going to do it again. We're caught between this low and the high that you see right there. You're going to see them on the swing lines with the break low right here, the rally high. Now, what the market's also done in that process is it's got the pattern of higher lows and higher highs. Should the market take out today's lows tomorrow, you would have a pair of lower highs and higher lows. Take out 950 and the market becomes all bearish at that point in time. So you're narrowing in the breakout again. Think of it as that triangle formation, and a miniature one's happening right now. I had shown you a while back on the weeklies as to how that had formed and broken out to the downside. Now the dailies seem to be doing that as well. And this whole battle is taking place against the 18-day moving average of closes, with prices staying under them even though the swing line has been up. Therefore, you've had the swing line saying the trend is up, the bias down because you're under the 18-day average of closes. In that process, the Bollinger Bands, which had been very far apart, have now narrowed in and they're curling back here. So should the market take out the 950 level, that's a big should, but should it do that, 939.5 is a potential target. What if the market starts back on the upside? Well, on the current formation, it's plain, still got the swing lines pointing up. So if you don't take out today's lows, or I'll give you another if. You take out today's lows, you don't take out 950, and you get a reversal back up tomorrow. You could then argue again, you've got higher lows, higher highs. In other words, this is a game in the beans that can swing either way. The bias is down since you're under the 18-day average, but that can shift just by getting right back over it. And from here, that's 5 cents away. As we take a look at momentum, momentum has been coming up, and that's why this market has had this upward beat. But it's not pointing higher. It's sort of just stalling out right now, and that is important. The meal market entered the bear camp today. Now, coming into today, and we'll take a look at this through yesterday, the market had a pattern of higher lows and higher highs, and the pullback looked initially like it might be good for the upside if you didn't take out 314.20. If you take 314.20 out, one of the targets could be the lower Bollinger Band, and that seems to be what's in place right now for this market. So the only thing now that can stop the downtrend at work is getting over 319. Barring that, 308.60 is the next downside target should the market reach for it. Momentum is pointing down, saying that's very possible. At the same time that's occurring, they've reversed the meal oil spreads. It had been the point where it was sell, sell, sell in the soybean oil, and the meal market, if we come back here, was buy, buy, buy at that time. Now they've reversed that, so now it's buying of the oil, selling of the meal, and that goes back and forth all the time. I wish I could tell you the exact reasons why. I don't have them, all right? But it's a fundamental play that goes back and forth and gyrates with rapeseed and canola and all the other goodies that go on there, but that seems to be what's going on. Now, the corn market fell apart and joined the bear camp today. Coming into today, I'll get rid of this action. You did have the pattern of a higher low and a higher high, but you closed under the 18-day average. Taking out 367.25 would trigger bearish action, which is exactly what happened, and the potential here is to the 361.5 level. Keep in mind that you're now quickly into oversold territory, so I would expect the bears to be protective of these positions or trading it more gingerly. The market that's super volatile and breaking out to the downside is this wheat. Lower highs, lower lows. First day under the Bollinger Band in a very oversold condition. Now, I've seen this before because if we take away today's action, we had sideways action. Notice the black bands, how they were both going sideways here. Now you break through. What's going to happen tomorrow is the math of this is going to drop that number again when they reopen tonight. And the question is, can it just keep falling away and widen these bands out, or does it try to get back into it for the end of the weekend? Because you're not embedded like you were back here, I can't say that you're going to get all that big follow through yet. So got to watch it, but there's no reason to be bullish. And sugar. The story is it continues to fail against each test of this 18-day average of closes. It stays under it. The swing line has been up, but you're oversold. It's been a son of a gun market to try to catch recently. Now, if you could tell me what changed in this market, coffee, from yesterday. Yesterday's high was 146.40. Today's low, 133.85. Now, at 375 a point, that's a heck of a lot of money. It's a $4,000 swing. You went from the Bollinger Band high to the Bollinger Band bottom, from overbought to oversold like that. Something's brewing, and it's all within these narrow bands, but this looks and acts for the first time like a breakout to the downside. And as I said when the market was railing, it would either be the Bollinger Band or the 100-day average that would offer the big resistance, and it was, as it turns out, the combination of them. You just couldn't get to that 100-day. Now the market's got a pattern where admittedly it's oversold. It's not in a trend when you get these type of formations, but it certainly has downside bias and big downside bias. Cocoa market. First thing my eye goes to is the locked-in embedded reading. It's riding the lower Bollinger Band. It's just super bearish. And I wish I could tell you when the market will bottom out. I'm not looking for that. It's the rallies that apparently have to be sold each and every time until this market finds its home. In the cotton market, here's the power play. It's one of the few parts of this softer grain market that has got the higher lows, higher highs, and it carried now over the pattern of about a 2-week period from this Bollinger Band bottom to the Bollinger Band top in an overbought condition. You're about ready, I think, for the market to encounter some profit taking up here. Let's see if that is, in fact, the play that the market makes. Now, another market that could stall a bit is this run in the cattle market. Now, stall is a different word than break down. And the reason is you've developed here your embedded readings. They're in place now. So with the embedded reading all in place, I don't look for deep breaks to be lasting, so we'll see what happens. Should the red line close under 80, well then maybe you get back to this 112.50 area. But I wouldn't be playing for that. As long as the market stays like this, the bulls are in total control. And in the feeder cattle, you're joining that same parade. higher lows, higher highs, riding the Bollinger Band. And yes, you could break down here. Now, if you take a look at this reading, you've got both numbers over 80. Day before, both numbers on Wednesday over 80, and the day before. You got fully embedded readings. Until the red lines get under 80, the bulls control the marketplace. And in the hogs, the flip-flop. Super bearish events. Lower highs, lower lows. You had one meaningful rally recently, and that was it. And this market's let go, and it's in big trouble at this point to the downside. So when we look at it all, you got to figure out, if you're a grain trader, how do you keep up with it? And let me tell you what we are. In the mornings, we get here 6:30, 7:30 in the morning. We come rolling in. And the talk of the day is what's going on in the meats, the grain markets, the financial markets. And you've got a lot of bright people here discussing it. We're talking to people, by the way, all over the world. So it's not just limited to America. We have trade that we do and so on as a group here. And it's fascinating when you read about what we know. We write about it all day long, too. And it's unique to us. If you'd like to see what our customers get, it's not stuff we're sending out to the John Q. Publics. We'll give it to you so that you can see why you should have a trading account with us for a couple of weeks to try it. All you need to do is give us a call. You can go to our website, sign up for it. You can click up here. And remember, you can choose the categories you want to get the information on. If you're not ever going to trade meats, why get anything on the livestock market? You want the currencies, the grains. That's the stuff we give. I'm Ira Epstein. You have yourself a great day, and I will talk to you tomorrow.